Hey, how's it going, everyone? So today we're going to be taking a look inside of my M1 Finance portfolio that's sitting about $120,000. And today we're actually going to be just mainly focusing in on our financial sector over here, just because with everything going on with all the different banks, going out of business and a couple of the stocks actually going completely to zero, which is such a rare thing to have happen. I just kind of wanted to overlook take a look over some of the stocks I have in here, which you could see we have four. And if these are companies we still want to keep, or if they're companies we want to get rid of, or even get out of financials entirely, because it is a lot riskier than some of these other companies that we have in the portfolio. Now, if you don't know who I am, my name is Dennis. I do love sharing my investing portfolio. Even though my name up here is Dividend Dennis, I'm not hyper focused on dividends right now. I am focused for dividends in the future so I can live a life where I can just do the things that I want to do. As you can see, I use M1 Finance, which is the platform I like using for this portfolio. I do have other platforms like Vanguard and Robinhood for other means such as retirement or even a little bit more high risk investing. So let's take a look at these companies. So you can see right here, obviously we have Discover, we have Square, or technically Block, I should say. We have Ally, and then we have SoFi, which was the most recent add into this portfolio. Now, you can see over here on the right side of the screen that we actually have 3 out of the 4 in our all-time in the negative right now. Now, Ally just recently went into the negative because of everything that's been going on with Silicon Valley Bank. Same thing with SoFi. I saw some pretty big drops, actually, I think just in the last week. If we go just in the last week over here, yeah, you can see 20% for Ally, 12% for SoFi. Block actually only dropped about 5%, and then Discover actually dropped quite a bit, but I was still relatively good in the green there. So even in my old time, I'm still in the positive there. So we kind of wanted to take a look and see, are these companies I still want to hold? As you can see here, when we go in here, we have a total cost basis of about $5,000 with Ally with 168 shares. They have a very nice paying dividend, but obviously there's risks becoming involved with owning banks, with people being freaked out and, possibly selling out, which obviously lowers the price of the stock. You can see it's at $23 as of this recording. So I've actually been doing a little bit more buying over the last couple of days just to help lower my average cost. And I'll actually go in here to show you. So I did a $200 buy, and I did it into the 3 out of the 4 companies I have in my financials. So you see I did $75, $100 on SoFi, and then $25 on Discover. And if we go back over here, I did a $1,000 buy. And this time I actually did Ally for about $300. SoFi I did about $400. And then you can see I also did Amazon and Google because they were also taking some pretty big hits. So I'm just kind of really trying to evaluate, if I'm making these right decisions of sticking with these companies. I'm here on Seeking Alpha, which, by the way, if you are enjoying the content here and you want to check out really good data and getting a lot of information for your stocks, check out the link in the show notes down below. It helps support the channel, so you just keep getting more free content. But this is actually what I use on a regular basis. So here on Seeking Alpha, I can actually see a lot of information, like all the analysis as well as the news. And then I also do utilize Qualtron, which helps me out a little bit more with the visuals. So like when I'm popping up here, I can see a lot more visually as far as like revenue growth. I can see, if I bring this up, this is the free cash flow. So this helps a lot in that process. I'm definitely a visual learner. So for me, going through these books and looking at all the information that I need to just at a quick glance, this is going to help me out a lot, and then I can go a little bit more in depth with Seeking Alpha. So again, when I look at some of these companies, obviously there's going to be a lot more risk, looking at a little bit more of the details, especially with everything having gone on. So those are things that I have to do in the near future to make sure that I am going to make the right decision. But as of the moment, I have been buying more, but I have been looking at Ally with their being pretty much over leveraged with cars. You can see here like large credit loss provisions. So when I went through the article and some of the other ones that were here on the Seeking Alpha website, because you can get the full articles if you are a paid member on there, which is really nice, gives me a lot more great detail on these companies that I've been either interested in and or wanting to get invested in. So having read that, I'm still willing to take the risk because, as you saw, I only have invested so far $5,000 into the company. So I'm not at a huge loss if this ends up going completely to zero. And that's always something I think you should be taking into consideration when investing into any company, that the chance of going to zero is not 0%, right? There's always a small percentage that it's going to be able to get to that point, regardless of how long it can take. So I have been buying and I will continue to buy. Let me know if in the comments if you're somebody who's continuing to buy a lot more of the banks, especially at, these prices that have been pushed down quite a bit. Now, before we continue on, if you're getting some value and enjoy these types of videos, make sure to hit that subscribe button so you can get new video updates as they come out. And then we go into SoFi here. You can see in our all-time, we're actually only down about $380. Now, I do have SoFi as well on Robinhood. I have about 700 shares, so combined, I have about 1,100 shares of the company. And at the $5.55 price point, I think that's pretty much my average price when I combine the two purchase prices from here and on Robinhood. Now, obviously, this company doesn't pay a dividend. I don't expect it to anytime in the very near future, but banks are pretty notorious for bringing in dividends down the road. And so this is going to be a company that if things go the way I expect them to, based off of the things that they're working on and what I see for the future, this could be a really nice, not only dividend paying company, but growth company as well too. And then if we go to Block over here, now with Block, I do have an average share of about $98, almost 60 shares here, because obviously you can do fractional shares on M1 Finance, which, by the way, if you did want to check out their platform, I will also have that in the link. That does give you sometimes a nice bonus for using that link. But you can see right over here, even with getting close to 60, I'm still debating on if I want to keep Block. So let me actually bring up their information here. So with Block, this is one company that I've been considering getting rid of. The nice thing is they did lower their outstanding shares, which has been really nice. If we look at their free cash flow, it's definitely been in the negative for a couple of quarters here at this point. Look at their stock-based compensation. You can see that has been going up pretty substantially, and I don't like that. Obviously, that dilutes me as a shareholder. They have taken care of that, like I mentioned, but still something to be very concerned about when things are going up that substantially, but yet the cash flow has been going downwards, or still in the negative, I should say, because it's, I guess, going back up in that regard. But this is a company that I'm still debating on if I want to keep, especially considering that I could be utilizing these funds, which if it got back to break even, it would have been about almost $6,000 to be able to invest in Discover, Ally, and SoFi. And then the last one, which is the one that's actually in the positive right now, is my Discover financials. So you can see here we're up about $600 in our all-time. 113 of that has been the dividend because it has gotten at a nice price point for us, which was $91 in. So I think our average dividend yield, or our dividend yield, I should say, for our cost was like 2.5 something, which is really nice. And then you can see here it's back down to about 101. It was climbing for a little while there. Let me actually go on to Seeking Alpha here. Bring this up here. So you can see here that's 52-week high. It was actually up at $121, and that was actually not the most recent time, but in most recent time, the last couple months, it jumped all the way to about $118. So when it did go up, I slowed down on my purchases, but now that it's dropping down a little bit, you saw earlier, I did start putting in a little bit more purchasing in there just to be able to build up a little bit more holding, but not dramatically increasing my average cost. So I didn't want to do that until then, but again, at those prices, it's really, really nice. You can see here it actually recovered a little bit recently, about 4% for the last day, which is a good sign showing that, a little bit of that scare was a very short period of time, but hopefully it'll continue to go back up in the long term. Now, let me know in the comments if you have any stocks in your portfolio that are in the banking sector, and if you're deciding to keep them, if you sold them off, or if you are just buying a lot more because you're able to get them at a much, much nicer price point. So for now, I'm definitely going to be holding on to all the companies that I have in the portfolio, and definitely be buying more into Ally and SoFi, maybe a little bit more into Discover if it doesn't continue to climb back up too much. But I think I might be holding off on buying more of Block, maybe a tiny bit more, because I like to get over to that $60 or 60 shares amount. But after that, I might consider selling once it gets closer to break even, or even goes a little bit beyond that, and then I can take those funds and split it into the other 3 funds in the financial sector that I have here. Now, do me a favor, so you can keep on watching more video content here on the channel. Check out my video right over here on screen.